Dividends are a great way to make extra income on your stock market investments. Typically, dividends pay every quarter, sometimes every month. And now there's an ETF that claims that they're going to pay you a dividend every single week. But there's a few things that you need to know about this before you dive into just running off and saying, hey, I'm going to get weekly dividends. That's what we're going to explore in today's video. First off, I got to welcome back my subscribers, my Sweet Life family that are aimed to give themselves a raise and live their ultimate sweet life through personal finance and building ultimate wealth. If you're not sure what dividends are, typically when you buy a stock, your hope is, let's say you put in $100, your hope is over time, your $100 grows in value, and then you could eventually sell it for a capital gain. That's kind of cool. But did you know there's also stocks that not only will grow over time, but will pay you out of their profits in the form of dividends, sometimes every quarter, sometimes every month, or like what we're going to talk about today, every single week. And that's what's really cool about it. So let's say you decide you're going to invest $100. You put your $100 down into this wallet. We'll call this wallet the stock. But every now and again, that company will pay you some dividends. It's going to be a small amount of how many shares that you own, but you have two options. You can take this and run with it and call it a deposit, or you can reinvest it, called the Dividend Reinvestment Program. You can reinvest that money back into the same stock that paid you the dividend, which means at some point your $100 could eventually become so much more. But enter the ETF that claims it's going to pay you every single week. Now that might sound cool at first, but there's a lot of things as I looked into this that I was a little bit concerned about, and I want to share that with you today. The very first one we're going to look at is, and you got to give them credit for this awesome name, TGIF. Yes, that is the ticker symbol of the Sofi Weekly Paying Dividend ETF, TGIF. You got to give them credit. I think that's a phenomenal ticker symbol. But let's look under the hood. So right here on SoFi's website, as you can see, we got TGIF. And if you look at this, it says, why invest in TGIF? And the very first thing that they point to is get paid weekly with this weekly income ETF. And there's two things to think about with that particular statement. When you say right out of the gate, you're going to get paid weekly, you can obviously tell that their goal is to market that to those people that would be most interested in getting paid every week. Now, let's be honest, getting paid every week sounds pretty darn sexy. But what's under this hood of this vehicle? How does it look? Does it look sexy or does it look rusty? That's what we're going to find out. Now, right out of the gate, the first thing that I see that I'm not too thrilled with is right here, 105.63. At the recording of this video, this particular stock trades for $105 a share. So in order to start getting your dividend payouts, if you want to get a full share's worth of a dividend every single week, you're going to have to put up immediately $105. So that is something, the very first thing that you're going to need to keep in mind. This is something that I always look at when it comes down to ETFs, exchange traded funds, is the expense ratio. Look at that net expense ratio at 0.59%. That is quite high when it comes down to an expense ratio for this, what they call actively managed fund. Now, what that means by actively managed, there is a manager assigned to TGIF. Their goal is to make sure that they have the right type of holdings that will guarantee you what they're selling you, which is the weekly dividend payout. But a 0.59% is quite high. Compare that to things that typically have a 0.06% expense ratio. I would say this one is in the higher bulk of things that I typically don't go after because that is a pretty high expense ratio. So that means for every $10,000 that you invest into TGIF, you're spending about $59 in fees. But maybe that's offset by the dividend yield. Let's take a look at that. So right here on dividendinvestor.com, they actually break out what their payouts are on TGIF every single week. You can see the declared date and the pay date right here. Every single week they are paying as of May 28th, May 21st, May 14th. But look how much they're paying. A measly old 5 cents per share. So you got to keep that in mind. Every share that you spend $100 on, you're going to get 5 cents a week. So how do we calculate that dividend yield? Well, in order to calculate the yield, you take the yearly dividend divided by the stock share price. In this case, what we're going to do is the weekly dividend is 0.05 at the moment, which is 5 pennies. And I'm going to multiply that by 52 weeks. That gives me an annual dividend of $2.60 per share. We then take that $2.60 and we divide it by the most recent price. I'm going to take that 105.63 divided by 105.63. That gets me a dividend yield of 2.46%. Okay, so that one has a fairly high expense ratio and the stock price is also quite high. Let's look at SoFi's other weekly paying dividend ETF that they just opened a couple weeks ago, and it's called WKLY. Now this one does look a little bit better. Here we got a closing price of $49.89. At the recording of this video, it is trading for a lot less than TGIF, and its expense ratio is less as well, 0.49%. Now one thing to keep in mind is that this particular ETF is actually passively managed, which is kind of interesting when it comes down to all of these holdings that pay what will eventually become a weekly dividend payout. By doing a very quick search here on dividendinvestor.com, you can see that they are only paying out 2 cents a week. And of course it just started, because this started I think around May 17th of this year of 2021. So it is very new. But let's take that example as well. So if we have 2 cents times 52 weeks, that's an annual dividend payout of $1.04. We'll take $1.04, we'll hop over here to the weekly. And okay, right now the closing price is $49.89. So we'll take that 104, we'll divide it by 49.89. That's a dividend yield of 2.08%. But one thing I want you to think about when it comes down to the expense ratio, and if you should actually consider either one of these ETFs, how much money do you want to make a week? If you are attracted to the weekly dividend idea, how much money do you want to make? Let's say you want to make $1,000 a week. What we're going to do is we're going to take $1,000 that you want to make every single week. We're going to multiply that by 52 weeks in a year. Of course, that gives us $52,000 a year in dividends. What we want to do in order to figure out our yearly income goal is we take this amount, $52,000, and we divide it by the dividend yield percentage. So we're going to take $52,000, we'll divide that by 2.08, and then I'm going to hit the percent to make it a decimal point. And that means you're going to have a balance of $2.5 million in order to actually get yourself to earn $1,000 a week, specifically in WKLY. So if that sounds like an absurd amount of money, keep in mind, in order to do that, you're also going to get hit with a very high 0.49% expense ratio. So something to keep in mind. And if you're wondering what a 0.49% expense ratio looks like on a $2 million investment, there it is, $12,250 in fees just for buying this ETF. So as we look at these two ETFs that pay weekly, you can see they do have relatively high expense ratios. They don't pay the biggest dividend yield, and there's a lot to go into it in order to just pay you weekly. But let me know, what do you think? Do you think this is actually a cool idea? Do you like the idea of getting paid dividends every single week? If you do, comment down below. And in fact, I will actually show you another way that you can make weekly dividends by managing the portfolio yourself through M1 Finance. In M1 Finance, you can actually go into their service, create your own what they call pie, build in all of the different ETFs, all of the different stocks, or any type of investments you want to do. And if you time it right and you look at their dividend payouts, whether it's quarterly or monthly, you can actually line that up correctly to get paid weekly on the dividends. And better yet, M1 Finance allows fractional shares. So even if you only got $10, $50, $100 to invest, you can start with that, invest in the pie, and start your dividend paying journey. There's a link down below in the description. Click on that and check out M1 Finance for yourself. But if you're interested in me building a pie based on weekly paying dividends, tap the like and comment below, and I'll make sure I follow up with another video on that topic. But as far as WKLY, as far as TGIF, based on what we explored today, what's your thoughts on that? Worth it or a little bit too expensive? You be the judge. But until next time, here's some other videos that might help you in your dividend journey and more. Continue to live your sweet life, and we'll see you on the next video.